Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, firstly today, I just want to touch on a couple of key stories which were not on the economic calendar, but I do think are worth touching on in this video. The first one is the fact that the Brexit trial ended on Tuesday, so yesterday evening. And the question now remains, can the pound stage a recovery? We've seen a lot of weakness in the pound over the last couple of weeks. It is now down around 20% against the US dollar since the Brexit vote itself, and not far below that against the euro. And I guess the reason why we're questioning whether the pound can stage a recovery will hang on the outcome of the Brexit trial. If ministers do get the opportunity, both the lower and the upper houses of Parliament, to vote on whether to trigger Article 50, then that increases the possibility that that Brexit will never happen. It's quite well known that people within Parliament, there's more people that do not favour Brexit as opposed to do favour, so really very much out of line with the referendum vote on the 23rd of June. So the possibility that they could actually vote against it is very real, and therefore could prompt a bit of bullishness in the pound. Obviously not back to pre-referendum levels, but the fact that there's a little bit of hope, I guess that that Brexit won't happen, could actually be pound positive. Of course, if the court believes that that Article 50 doesn't need to be triggered by Parliament and that Theresa May can do it, then you'd expect the pound to remain or go below the levels where it's currently at, although I don't think there's too much downside left in the near term, if I'm perfectly honest, although it will be interesting to see how that plays out. So we could expect a lot of volatility in the pound in the near term. They've not announced when that announcement will be made. They've just said they'll make the announcement ASAP. Now, the thing to take care with is the fact that they will likely be a challenge to this in the Supreme Court. So any announcement is not necessarily going to be final. The other thing to note is that we do have the final US presidential debate this evening. As it stands, Clinton, depending on where you look, has a lead of between 4 to 12 points over Donald Trump. So there's still a wide gap between the polls currently. As we learned with Brexit, the polls aren't always to be followed or believed. But there is still a large number of undecided voters. I think it's essential that Donald Trump performs well at tonight's debate, given that he is appeared to have lost at least the first one, but maybe the first two, given the fact that he's so far behind, given the fact that he is facing so many difficulties currently with allegations coming right, left, and centre. I think it's very important that he performs very strongly in tonight's debate and is seen to have won the debate this evening. We guess we'll see how that reacts and how the market responds to this will determine whether people believe he's won or lost. I think the key to this will be found in currencies such as the Mexican peso, which has been seen as being very very susceptible to the election result. I was only reading earlier about how I think it's 80% of Mexican exports go to the US, and the US accounts for around 27% of the Mexican GDP. So clearly a very important trade partnership between the two countries, a trade deal, NAFTA, that Donald Trump has threatened to tear up and renegotiate. If Donald Trump is seen to have won the election, and given how much we've seen a rally in the Mexican peso recently, you would expect to see some Mexican peso weakness. We can bring that up actually now with the charts. That's USDMXN, and you can see here the Mexican peso, by the fact that the chart's going lower on this daily chart, has very much strengthened ever since Clinton took a lead in the polls and stretched that lead. And with all the allegations coming out, the debates occurring during this period as well, you can see that the Mexican peso has strengthened quite considerably in that time. I'd say another Clinton victory tonight, you could see this trend line coming under pressure around the 1830 levels. We've also got previous support around these levels as well, and the 200 and 233 moving averages. Should we see a Trump victory, then I think we could see some upside in this pair, with 1880 and 19 being your next two key levels of resistance for the dollar peso. I think this is going to be the key determinant of who's won this particular debate. Now that we've covered those two stories, I just want to touch on the economic calendar because it has been a very busy day in terms of economic events. As you can see, the Chinese data was largely in line with expectations. All this fiscal stimulus from the Chinese government has clearly paid off. It is concerning though because a lot of the drivers of GDP growth in China has come from unsustainable areas, things like debt, the housing market, the bubble growing here as a result over the course of this year, and obviously government spending. They wanted to rein all these factors in to try and drive more sustainable levels of growth and transition to a more consumer driven economy, and it seems they've kind of gone off course with this in order to preserve these higher levels of growth. Retail sales did nip high though. This is going to be one of the benefactors, of course, from a faster growing economy. So there was very little reaction early on in the session to this Chinese data, I should say, mainly because it was largely in line with expectations, and it does seem that the government is on target again, assuming this data is to be believed. The UK jobs data was largely in line as well. Average earnings excluding bonus exceeding expectations, including bonus actually dipping slightly. It's still too early, I think, for the effects of Brexit to start having an impact on things like employment. I will expect that to happen though over the next 6 to 12 months. The US data was very mixed again from a housing starts and building permits. Housing starts falling to the lowest level since March of last year. Building permits rising to the highest levels since December last year. So again, very mixed data, housing data here from the US. The Bank of Canada released its latest decision, which was unchanged at 0.5%. Now, what was interesting here is following the initial announcement, we did see a rally in the Canadian dollar, which took us back towards 130 against the US dollar. But it seems that the comments from the governor Poloz since then has really turned it much more bearish. It's made it much more likely, dovish. It's made it much more likely that we're going to see a rate cut in the not too distant future from the Bank of Canada rather than a rate hike. I think the warnings about lower GDP growth, about the government's efforts to stabilise the housing market having detrimental impact for the residential sector, and lower exports as well. I think this has raised a few concerns regarding the Canadian economy, or increased concerns about the Canadian economy, and I think these very dovish remarks would indicate that a rate cut may well be on the horizon for Canada. So we've seen this very dramatic U-turn, and now we're back trading back above 131. You can see how rapid the U-turn was following the start of Poloz's speech here, which was around 4:15 UK time, 3:15 GMT. This was around the announcement itself, so initially things were looking a bit more hawkish, but then we saw this move back towards the levels it was trading at before. So a lot of volatility coming in the Canadian dollar today, but I think the key takeaway here is a rate cut looks far more likely now than a rate hike in the not too distant future. Another key piece of data that we had today was the EIA crude oil inventories. You'll note that we were expecting a build of 2.7 million barrels, adding to last week's build, which came following a 5-week consecutive drawdown in crude inventories. We had the warning signs yesterday from the API weekly crude oil stocks, which showed a drawdown of 3.8 million. This actually exceeded that again, which again is bullish for oil. And as you'll see here, oil is now rallying once again. Brent crude, from a Brent crude perspective, we're trading at the highest levels since earlier last week, and potentially going to start to look to push the highest levels since October of 2015, back well above $50 at 52.70. The next resistance, of course, coming from last week's highs at around 53.30. In terms of WTI crude, we've actually exceeded last week's highs, and now we're pushing for the highest levels really since July. And if I can just open this out a little bit, really next resistance levels now are coming in at around these 55.50 to $56 a barrel levels. That's your next key zone of resistance, 55.50, 56.50. And as you can see during this period, from April 2015 through till July 2015. That was a very key zone of initial resistance turned support here. So that's a big zone to be looking out for. But things looking a little bit more bullish once again following those inventory numbers. Finally, we do have a few more things to keep an eye out for today. John Williams, as you can see here, was due to speak earlier on in the session. He has released his opening remarks. He did not mention monetary policy, so we'll wait to hear further comments from him here. We'll also hear from William Dudley, who is a voting member of the FOMC currently, and his recent comments have suggested that we are likely to see a rate hike this year. So it looks as though while he didn't vote for a rate hike at the previous meetings, a rate hike vote from Dudley this year does look likely. So it'll be very interesting to see if he builds on these comments later on this evening. We'll also hear from Robert Kaplan, not an FOMC voting member, as isn't John Williams, but the difference here being that he is an FOMC voting member next year. So his comments should still attract a lot of interest when it comes to looking beyond the end of 2016. Aside from that, we've got the Fed's Beige Book, which will give the latest insight into the Fed's view and the outlook for the US economy ahead of a couple of very important central bank meetings in November and December, and ahead of the meeting in November, which is actually in just 2 weeks' time. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.